1 week ago, this portfolio was worth $129,600. This week, it's at $130,600. That's a gain of $1,000, or about 0.8%. A solid week. But the real story isn't the gain. It's the investment I still refuse to make. Broadcom finally came back into the area I'd been waiting for, and I still didn't buy it. So the question this week is simple. Broadcom finally hit my buy zone. Why am I still not buying?
And later in the video, I'll show you the full portfolio, every stock I'm holding, and every active trade I still have open.
Welcome back to Precision Capital, where I document every decision on my journey from $100,000 to $1 million. Before we dissect why I'm holding off on Broadcom, let's take a quick look at this week's top winners and losers. Let's start with the top performers. My top 3 this week were Copart, Palo Alto Networks, and Constellation Energy. CPRT was the biggest winner. The position is now worth about $11,000, and it gained roughly $600, or 6%, this week. My total return on the position is now about $380, or 4%. Now let's look at the other side. My top losers were Broadcom, Deckers, and Amazon. Broadcom was down about $340, or 8%, for the week. The position is now worth around $3,900, and my total return is slightly negative. Normally, an 8% drop in one of my holdings isn't something I'm excited about. But this time, one of those declines is actually exactly what I've been waiting for. And to explain why, I need to go back to the decision I made last week. Last week, my semiconductor signal turned bullish. But by the time I got that confirmation, Broadcom and Arista Networks had already moved past the entry prices I wanted. I didn't want to chase either one. So instead, I sold one SOXL $90 put expiring September 18th. That was my way of taking a bullish semiconductor trade without buying more Broadcom at a price I didn't like. I collected $960 when I opened the trade on August 6th. Then, on August 11th, I bought the put back for $580. So the trade made about $380 gross profit before fees. The SOXL trade let me participate without chasing Broadcom. And now, Broadcom has finally come back toward the price I wanted. But there's one problem. The price is here. The confirmation isn't. Let's look at the Broadcom chart. Last week, the problem was price. I liked the semiconductor setup, but Broadcom had already moved too far above the entry I wanted. This week, that changed. Broadcom pulled back into the area I've been watching. And when I say buy zone, I want to be very clear about what I mean. I'm not saying Broadcom is objectively cheap here. And I'm not saying the stock automatically becomes a buy just because it reaches this area. This is simply the area where I'm willing to consider adding. There are 2 things on this chart that make the area important to me. The first is the 50-day simple moving average. That's the blue line here. In simple terms, it shows the stock's average closing price over the last 50 trading days. Traders often watch moving averages like this because price can sometimes react around them. The second thing is this fair value gap area I marked on the chart. I'm treating that as another possible support area. I don't need either one to work perfectly. What matters to me is that they're both bringing my attention to roughly the same area. So, my price condition is now met. Again, that only means Broadcom has reached the area where I'm willing to consider adding. It does not mean I have a buy signal yet. That's where confirmation comes in.
My rule is that I want to see a bullish daily candle coming off this zone with higher volume. That would give me evidence that buyers are actually responding to this area. And that distinction is important. Support tells me where to look. Confirmation tells me when to act. A stock can touch support and keep falling. So if I buy now, I get roughly the price I wanted, but I'm betting this support holds before buyers have confirmed it. If I wait, I get more evidence, but I may have to pay a higher price if Broadcom rebounds first. For me, that's the trade-off I'm willing to make. I'd rather risk paying a little more after buyers show up than put another $4,000 to work before I have that evidence. And because I already own about $3,900 of Broadcom, I'm not missing the move completely if the stock takes off. If confirmation appears, I'm considering adding roughly another $4,000, which would be another 1/3 of the position I'm building. So the price has finally come to me. Now I need the confirmation before I add more. And the broader market is another reason I'm comfortable keeping that standard. Because on the surface, the market actually looks pretty strong. This week, cooler inflation data helped push the S&P 500 to another record. That's a positive backdrop. I'm not bearish, and I'm definitely not predicting a crash. But last week, I talked about how we're moving deeper into a midterm election year, and historically, that can bring more volatility. That doesn't mean I'm bearish, but there's another indicator making me cautious right now: the VIX. The VIX is basically the market's volatility gauge. When it's high, investors are expecting bigger swings. When it's low, the market is relatively calm. And right now, the VIX is back around 14, near the low end of its recent range. However, I also don't want to assume these calm conditions will last forever. That's why I'm paying attention to what happened the last couple of times volatility got this low. First, look at the S&P 500. I marked these two areas in gray. In both cases, the market was holding up pretty well, but eventually we got a pullback that gave us much better prices to put money to work. Now, let's look at the VIX during those exact same periods. You can see that before those pullbacks, the VIX had fallen back toward this same low area, around 14, very close to where we are today. Now, I want to be clear. I'm not saying a VIX at 14 means the market is about to crash. Low volatility can stay low, and this market can absolutely keep moving higher. But it does tell me I don't need to chase. If I find a stock today with a great setup and attractive risk to reward, I'm still willing to deploy cash. But when the overall market is near record highs and volatility is this low, I'd rather keep some capital available instead of forcing an entry. Because if volatility comes back, history shows how quickly better opportunities can appear. And that brings me back to Broadcom. The price is already where I'm willing to consider adding. But with the market conditions I just explained, I need more than the right price. I need a better setup before putting another $4,000 to work. As promised, here's the full portfolio. The account is sitting at about $130,360, with roughly $7,560 in cash and about $122,800 invested in stocks and options. And I want you to see every position I actually own. Microsoft is still my largest position at about $27,700. As I scroll down, you can see every holding: my share count, average cost, total return, and current position value. And here's Broadcom, just under $4,000 right now. That's the position I'm considering adding another $4,000 to, if I get the confirmation I'm waiting for. And that gives me two things to watch next week. First, Broadcom. Do I get the bullish daily candle off this zone with higher volume? If I do, that could trigger the next 1/3 addition. Second, Palo Alto Networks. My actual gain on PanW is much higher than what Robinhood shows. Next week, I'll show you where I originally bought it and what I decide to do with the position. Those are the 2 decisions I'll be watching next week.
Every trade is documented before the outcome is known. Subscribe if you want to follow the journey to $1 million in real time. I make the decisions. The market writes the ending.